The amount of money invested in cryptocurrencies almost tripled in 2021 to more than $2 trillion. If you are one of the many people who bought their first virtual currency last year, you may be wondering how your crypto investments might affect your taxes. The IRS doesn't treat Bitcoin, Ether, and other virtual currencies like it treats euros and dollars. It considers cryptocurrencies to be capital assets, like stocks or bonds. So if you bought crypto and held on to it, you won't necessarily owe taxes on it, even if its price went to the moon. But if you cashed out your crypto or used it to pay for goods or services in the real world, you have to report those transactions on your tax returns.
Hold on! Hold on!
If your crypto was worth more when you sold it than when you bought it, you'll owe taxes on the difference. But how much you'll owe isn't totally straightforward. As with stocks or bonds, the taxes you owe when you sell crypto depend on how long you've owned it and how its value has changed since you bought it. If you sold for less than you bought it, you owe nothing in taxes, and you may be able to use the loss to reduce your overall tax burden. If you had a gain on the sale, the amount you owe depends on how long you held the investment. In general, if you owned your crypto for a year or less, any gains get taxed just like any other income you have during the year. If you own the crypto for more than a year, your gain may be subject to the long-term capital gains rates, which in general tend to be lower. Depending on your overall income, that rate could be 0, 15%, or 20% for 2021. To do that calculation, you need detailed records showing when you bought your crypto, when you sold it, and how much it was worth on both ends of the transaction. If you were paid for something in crypto, whether as a salary, for mining coins, or as part of a contract gig, you'll need to pay taxes as though you were paid an equivalent amount in US dollars, including self-employment tax if the situation warrants it. The bigger crypto gets, the more the IRS is paying attention to it. Understanding how and when your crypto holdings will get taxed can help you plan ahead, make estimated payments if necessary, and stay away from costly tax penalties.